Hey everyone, welcome. How's it going? It is about an hour into the market, and I don't have my video camera back from yesterday yet, so we're just gonna have to do without seeing my face. But what's more important is being able to see what the markets are doing. You can see this morning that we definitively broke below that MA50. Now, that doesn't necessarily mean that we'll end there, but for now, that's looking like it's developing some momentum. So that is a it's pretty likely that we're going to end up somewhere below that MA50 today, and that is not good news. That's definitely starting out September, the first week of September, with a bearish move and ending in a what is looking like could develop into a pullback. So let's see how that looks intraday. Let's see what sectors are moving. But before we see that, let's take a look at what happened with our employment situation and with AVGO. Let's look at AVGO first. So AVGO definitely gapped way down, a gap to or has now traded through and below the annual VWAP in that MA 150. So this is not good news. This is not good news for AVGO. It's not good news for NVIDIA. And NVIDIA trading down in sympathy, not to the same extreme, but we are in a danger zone in NVIDIA. SMH, same thing. We're traded down now to the MA200 and looks like slightly below that. So if this market continues to have downside momentum, we could end up in the danger zone for SMH as well, which probably means QQQ. QQQ trading down towards that annual VWAP in MA200. So it's not looking pretty at the moment. We'll see how the day ends, but for now, it's not looking that great. Let's see what the employment situation did for us. And non-farm payrolls was revised down quite a bit. And then now we have 142. So that is implying a better job market than the previous month. But with a revision like this, we've been having some pretty big revisions with job numbers. So it's a little bit hard to trust right now. Unemployment rate at 4.2, slightly better. And let's see if we don't have a year on year. Okay. So it looks like an improving on the surface, an improving employment situation, which is a argument against rate cuts. And that might be why we have a downward bias. Let's see if the reaction to that news. Let's see, that came out at 5:30. Yeah, the initial news was up. So employment situation improving, that is indicative of a healthier economy. So actually, the good news is good news in this case. The market reacted well, but into the open, we started to drop almost immediately. So we definitely have a bearish tone to the market today. We're already at 544.5. The early indications of gamma indicated that we could trade down to 545. And if I was late into it was hard to see the separation of the concentrations until about 7 o'clock. And so by then, 7:15, I personally decided to take a risk because it's not a huge movement, but it did move from about 547 and a half down to that 545 level. That's good enough for about 40% in a single day. Actually, in such a short time frame, that is pretty good. So looks like we're continuing to move downwards. We may start to see concentrations lower at, I don't know if we'll see 540, but maybe at 543, 542, those concentrations may start to develop. But definitely there is a downward bias, and then we could bounce and get more of a choppy movement by the end of the day. But for now, early morning, this is definitely a downward movement. Let's take a look at our sectors. Oops, that's not what I wanted to do. But we'll see. I'll recover that later. Okay, so definitely SMH leading the way down. We've got, what is this one? XBI, biotech, also going down, technology going down. So these are the three, well, these two are the ones that we expect the most because of AVGO. That's what we were talking about earlier this week. We were talking about doing a hedge for AVGO earnings because it was most likely going to have a downward effect on the markets or on the tech sectors. But we didn't end up doing it, but it would have been a good it would have been a good trade. Let's see what this green one is. This is TLT bonds moving upwards, implying lower interest rates. Let's see what our Fed tool thinks. We're at 57% yesterday on a 25 basis point rate cut, 43%. So we're still there. So this might not have updated since yesterday. This is crazy. To me, this is crazy. Crazy, crazy, crazy. Super insane talk. This is less insane, but and a possibility, but not the higher probability. But we'll see. I could easily be wrong on this. I'm definitely far, far, far against the consensus and the news and what the vast majority of people are saying. But based on my experience, that's just I have trouble believing anything otherwise. I can see the other viewpoint for sure, and they could be right, but I'm sticking to my guns here and saying that a 0 basis point cut is still the strongest possibility, and then 25 basis points is possible as well. So let's see if our sectors. What we want to see if we're going to be trading, it doesn't matter if we're day trading or if we're looking for an entry. If I'm looking for an entry, I want to look for the best sectors. So right now that is, well, golden TLT, super defensive. That could imply that money is leaving the market. If money is leaving the market, then everything is going to go down, which I think, where's my XLP at negative 0.5%? So everything is down today. So it does look like money is leaving the market. So I don't know that longs are a great idea right now. But if I was going to go long, that would be XLP and what is this one? XLU. The same candidates, same suspects, right? The XLU, XLP have been the focus for a few weeks now. So definitely I would be looking for opportunities there. That way, if the whole market bounces, these two are the strongest and they'll start bounce higher. And as you can see right now, it looks like in the last 10 minutes or so, the markets do look like they're bouncing a little. We're recovering here first, but we are starting to get an upward movement in XLP, XLU. And we are, let's see, XLU is currently down 0.27%, XLP down 0.2%. So these are going to recover into the positive territory far before these guys do. So if you're going to look for longs, wait for that bounce, which looks like it may be happening at this moment. Yeah, slight tiny bounce right there, slight tiny bounce right there, slight tiny bounce right here in the QQQ. So we'll see if that develops into a full movement up towards the VWAP. But as you get to the VWAP, be careful because that could be resistance and will either come back down or chop sideways. So the safer direction would be to go short, and the obvious shorts are tech and SMH. XBI looks like it could have been a good candidate as well. And then if we get to the VWAP and then we start seeing that bounce back down, that's the time to go into your shorts. And you want to look for the weakest stocks in the tech sector and in the biotech sector, if that is the particular strategy. Even if I'm going for a swing trade, this is how we can fine tune our entries. So we could just go in right now if it's a swing trade, but your entry will be that much better if we wait until, say, a VWAP. If it was at 548 versus 544, okay, that's almost a 1% difference. And depending on the beta of your particular stock that you're going into, that 1% could get magnified to like 2 or 3% difference. And on an option, that's a difference between that's like a 5 to 20, 30% difference in P&L sometimes. So some fine tuning that entry could be, if you're going to be here watching the market anyway, you might as well do it. If you don't have the time and you don't the inkling to sit here and stare at the market, then you would just go in immediately for a swing trade. So it looks like that bounce is not really developing. It looks like we might be turning back down over here, and looks like 542 could be possible. So that's all we're seeing right now. Just be very careful. Like I said, I have been saying, there is a lot of downward pressure, a lot more risk to the downside than there is to the upside. Right now, we're below that MA50. If we close here, then we're going to start leaning our portfolios slightly bearish. And remember, my example yesterday was maybe I have 4 pairs of long and short pairs, and then 1 put or 1 bearish position. And that way, my entire portfolio is 80% neutral and only 20% bear. That we don't want to go full on bear until we're below the MA200. Okay. So bearishness going into the weekend. We'll see what develops after that. We've got decent volume coming in this whole week, given that it was a short week and there was people on vacation. But next week, we'll see if we finally get liquidity into this market and we hit the moving average or above every single day. If so, then, and we are directional, remember, volatility plus directionality means big moves. And we definitely have volatility in the market right now. We're at 21.72. We're definitely in the fear territory. So if we get directionality, it is more likely to be to the downside, and we might be moving quite quickly downwards. So if you want to put on a hedge, or if you want to lean your portfolio slightly bearish, like we just talked about, or if you want to put on some tail risk trades to the downside, today is probably a pretty good day to do that. Although I wouldn't necessarily be doing it at the lows. I would see if I could catch at least a bounce somewhere during the day. It is almost impossible for this market just to keep on going straight down all the way until close. At some point, it's going to taper off or bounce, and that would be your opportunity to get into a tail risk trade or a hedge. That's it for this morning. Have a wonderful rest of your day, and no after market on Friday, so I will see you on Monday.